This is the tax-free cash growth warehouse strategy. Pay your bills and pay yourself with the same money. Brought to you by SCFSIC. Aloha, I'm Stan Cox. I'm the principal strategist and broker with SC Finance Strategies and Insurance Consultants, or SCFSIC. I'm also the creator of the Tax-Free Cash Growth Warehouse Strategy, or TFCGW, and author of the books about this most powerful finance strategy. In this video, I will explain exactly how you can pay your bills and pay yourself with the same money by using the TFCGW strategy, and how by doing so you will recapture the opportunity cost that you've been throwing away up to now. So how valuable is that? Well, you have bills, you pay rent or a mortgage, you buy groceries. All these expenses are ongoing and repeat every month, right? So if your monthly bills total, say, $4,800, that means you're throwing away an additional $3,413 per year in opportunity cost, at least. And that would be compounding each year. This application of the TFCGW strategy is what we call the TFCGW Smaller Funded Personal Finance Suite. It is also outlined in my book, Tax-Free Cash Growth Warehouse, Nuts and Bolts. This is one of my personal favorites as an application of the strategy. Mark Twain made a very pertinent observation when he said, "The secret of getting ahead is getting started." This application of the TFCGW strategy is truly making the maximum use of the strategy, and as a way to really make a big positive difference in personal finances. That is because virtually all the opportunity cost is eliminated. Let's say the household income is $5,000 a month net. That is after income tax, Social Security, health insurance, and all that withholding stuff. And let's say the regular monthly cost of living is $4,800, including mortgage or rent, food, utilities, insurance premiums, transportation, etc. These are all known figures. Now, let's say that the cash value cash value of your whole life TFCGW policy is $6,000. Well, it's a very simple matter to take a policy leverage loan. And you can borrow up to about 95% of your total cash value. You either call your servicing agent or call the home office client services and request a loan for the specific amount that you need. In this case, it would be $4,800, as that is the known total of monthly expenses. Typically, you'll receive a check in the amount of your loan within a few days, or you can have it deposited directly into your bank account. You take the check to your local bank, deposit it into your checking account, and now you go ahead and write checks to pay the bills, buy food, whatever else is included in those known expenses. This is option one. Option two incorporates the use of a credit card, and we'll go into that later on. If you get paid twice a month upon receiving your first paycheck of the following month after you've taken the policy leverage loan, you call your agent or the home office client services line and instruct them to debit the amount of your paycheck from your checking account and apply it to your policy loan as a payment. When you receive your second paycheck of the month, you do the same thing. call and have the balance of the loan paid off. The following day, you call again, but this time you request another policy loan for $4,800. Rinse and repeat, as the saying goes. Now, let's take a closer look at what has happened to your cash value account and how this strategy has benefited you. If the policy loan interest rate is 5% annual simple interest, which is the current variable policy loan interest rate, the interest on the first loan would be $20 for the 1 month, but because you paid it off within a month of taking the loan. But wait a minute, you paid $2,500 of it off in just 2 weeks. So the interest for the first 2 weeks is just $10. Then there's only a $2,300 balance remaining for the rest of the month. Interest on that amount is just $4.79. Total policy loan interest for the 1 month paid back in this manner is just $14.79. During that same 1 month period, your $6,000 of cash value was earning the 6.2 dividend interest rate, which is the current dividend interest rate, unaffected by the policy loan. Therefore, your cash value grew by $31, minus the $14.79 policy loan interest you incurred and paid. You profited $16.21. How is that an advantage over just putting your paycheck in the bank and writing checks to pay for your monthly expenses? Well, first of all, you made a net gain of $16.21 on the money that you would have otherwise just paid out for bills, and that you would not have made any money on without using this strategy. Does money sitting in a checking account earn any interest at all? No. Do you ever recover any of the money you pay out for monthly expenses? No. In fact, whenever you pay cash for anything, there is the additional opportunity cost to you. In this case, it'd be 6.2% on the $4,800 of expenses, or $24.80. So let's make a comparison. You gain $16.21 with the TFCGW strategy. Any gain is better than no gain, and a lot better than taking a loss, right? By utilizing the TFCGW strategy, you save the opportunity cost of $24.80, money you would otherwise have lost. So really, you come out ahead by $41.01. That's $24.80 opportunity cost saved, plus $16.21 actual net gain equals $41.01. Extending that out over a year, you gain $194.52 in actual net gain by means of the dividend interest you earned. And you saved $297.60 in opportunity cost. That's a total advantage of $492.12 for the year over just paying your monthly expenses directly. And how cool is that? Now, the preferred way to apply this strategy is to plan ahead for its use and to build in a scheduled paid-up additions, or PUA, which will speed up the cash value growth while it also adds to the face value or death benefit of the policy. Chapter 7 of my book, Nuts and Bolts, goes into further detail on this part and option 2 that I mentioned at the beginning of this video. Option 2 includes the use of a dedicated credit card for greater convenience. My books on the TFCGW strategy are available on Amazon.com. And if you like what I've shared here, please like this video and leave a comment. Also, more detailed applications of the TFCGW strategy are coming. You don't want to miss it, so please subscribe to this channel, and that way you'll be notified whenever we post additional content.